Well, the all-share indexes we've just heard up 1.5% on the market today, and some big moves in some of the gold shares, Wayne McCurrie. Goldfields 10%, Athletes Gold 7.5%, Simmers and DRD 7%.
Yeah. I mean, gold was up, $20 on the day. But understand what really powered the JSE was that Anglo's was up 4% and Billiton was up 5%. And they're the big market caps. I mean, between the two of them, that's about a 600 billion market cap. And the gold shares add up to, call it, 250 billion. So the power was from those two shares. The rest of the market flat to down. A couple of the industrial heavyweights looking a bit weaker. Richmond down about 1%. SA Breweries down 1%. Banks looked for a change, actually went up slightly. First Rand up 3%. Standard Bank up about 1%. The market didn't like the Sanlam results too much. Pushed the share down 4.5%.
Well,
on the day.
On a relative basis, Sanlam Old Mutual. There's no question where you should be putting your money right
You
now.
would think so, yeah.
If Sanlam is worth more than Old Mutual, and
Yeah.
Old Mutual makes a whole lot more profit and
Well,
is a far bigger operation.
the thing with Old Mutual is very interesting. Old Mutual, the share price is down 80% from its peak it reached, I think, in 2007.
Did you see it dropped
sometime.
again today?
And it's down again today. But, I mean, a 0.5% drop in Old Mutual is virtually like a bull market.
On a daily basis. Although 0.5%, that is quite an improvement from its worst levels on the day.
Oh, yes, no, it was being slaughtered.
Do you have any idea where the selling is coming from, Wayne?
Selling can only come from overseas. The local, I doubt, look, in local institutions are not overweight this stock at all.
So it could still be panic selling coming from...
I would think so. And you look, don't even worry about Old Mutual's profit or loss. The issue is capital. It's not what they made last year. It's can they survive without a rights issue? And reading the financials when it came out, to me, it looks as though they can survive without a rights issue.
It's interesting to note, most of the day, between around about 10:30 right through until 3:30 this afternoon, the Old Mutual share price was trading at between 470 and 475.
Yes.
And then you had a good spike towards the close, but it's still at an all-time low, 5.7 today.
And then that's lit. It's totally at an all-time low. And when you look at the market capitalization, I mean, this is a 28 billion rand company. And when you think that Nedbank is a 33 billion rand company, and it's a subsidiary of Old Mutual. Work out the maths on that one.
Yeah, and Sanlam is over 30 billion.
And
so
Sanlam's
bigger
over
than-
30 billion. So, look.
If you were a hedge fund now, surely you'd be going long Old Mutual, short Sanlam. Surely you would be
think
in this
so.
kind of environment.
You would think so. After reading their results, you would think Old Mutual will survive. They don't need a rights issue. You should buy it because, I mean, the embedded value is 15 Rand. This is now trading at 5, so it's trading at 1/3 of the embedded value. Even though the embedded value is a little bit of an intangible, it does give you some indicator.
So if Old Mutual survives, and if you have a look at it just from a pure common sense perspective,
Yeah.
could the South African Reserve Bank or the South African government allow Old Mutual to go bust? No.
Well,
there are
look-
too many hundreds of thousands of people in this country.
The
who
South
rely on it.
African company won't go bust, and their policyholders would always be, their obligations
Protected.
would be protected. The problem sits overseas,
Sure.
and the problem sits in Bermuda and the US, because the European, which is mainly Scandia, didn't actually look all that bad, even though they're very short of capital in Scandia.
Well, we spoke to Julian Robertson. We're going to be picking up with him again next week. In fact, he's coming through to the studio, and we need more than 10 minutes with him. So we'll be doing
Yes.
a podcast with him rather than having him on the program directly. But we'll get more answers to those questions. Generally speaking, though, Wayne, it was a day also, I'd like to get your thought on this, where the coal shares were hammered. SACMH down 14%, Westcoal down 5.3%, coal, COAL, down also almost 10%. Any idea on what would have triggered that?
No, Alec, unfortunately I haven't. I must admit, it's not shares that I watch
But our
very
coal sector is
closely.
very small at the moment.
Very small.
And then Purple Capital lifting its head a little bit after that trading statement
Yeah,
today.
looking a little bit happier there. Of course, this is a very difficult environment for, private equity, these, Purple Capital type of players. Very difficult environment. But if they've got capital, they might find some huge bargains out there. Huge bargains.
And then Standard Bank going into Russia. It's quite big news. We've got Rob Leith in
Yeah.
the studio to tell us more about it later. But you'll
Look,
tell
well, I've just got one thing to say. If you don't buy companies when there's absolute doom and gloom and destruction out there, then you probably shouldn't buy companies, because this is when things are cheap. Now, what the Russian bank and what its prospects are like, I just don't know. But, I mean, I bet lots of companies, I bet you Anglo-American and Sappi would love to buy out companies. They just got no capital. At least Standard Bank's got capital.